Hello, I'm Jordan Blevins, Vice President and Senior Portfolio Manager at TrustBank Wealth Management. Welcome to this installment of Chart of the Month. Over the past several years, the Federal Reserve has been in the news quite a bit, and for a variety of reasons. But at its core, the Fed's role is really about trying to balance economic growth, employment, and inflation. Today, we'll take a closer look at how interest rates have evolved over time and what that means for investors going forward. As a refresher, the Federal Reserve, often called the Fed, really has just a few tools at its disposal. Their goal is to help foster economic growth and full employment while also maintaining the stability of the dollar and keeping inflation from getting too high. Historically, that inflation target has been in the range of about 2 to 3%. The most public and newsworthy tool by far is what's known as the federal funds rate. That's actually just an overnight interest rate, the shortest term rate in the economy, but it serves as the foundation for many other borrowing and lending rates. This chart shows interest rate trends going back to the early 1990s, along with projections and market expectations through 2026. It includes Federal Open Market Committee forecasts, longer-term projections, and current market expectations. Looking back, you can see how the Fed has adjusted rates in response to different economic cycles. For example, during the COVID pandemic, when much of the economy was essentially shut down, the Fed lowered interest rates all the way to zero to help cushion the impact on businesses and households. A couple years later, the economy came roaring back. Growth picked up quickly, but inflation heated up as well. For a period of time, inflation moved into the 7 to 9% range, which was well above the Fed's long-term target. In response, the Fed began raising interest rates in 2022 to slow the economy and bring inflation back down to more manageable levels. And over time, they have largely succeeded. Inflation has come down significantly and is now much closer to their stated objective. Recently, after 3 interest rate reductions last year in 2025, now the Federal Reserve appears likely to proceed more cautiously. With the economy remaining relatively strong and inflation close to target levels, policymakers may be hesitant to move quickly toward additional rate cuts. While longer-term projections and market expectations still point toward lower interest rates over time, the timing of those reductions may take longer to materialize than many investors initially anticipated. So while the longer-term direction may still be toward lower rates, the path to getting there may be slower and less predictable. From an investment perspective, that reinforces the importance of remaining patient and focused on long-term fundamentals rather than short-term rate expectations. More recently, attention has turned to leadership at the Federal Reserve. Since 2017, Jerome Powell has served as the chairman, but his term is scheduled to conclude in the coming months. The recently announced successor, Kevin Warsh, previously served on the Federal Reserve Board and brings extensive experience in monetary policy and financial markets. From an investment standpoint, it's important to remember that the Fed operates independently and bases decisions on economic data and long-term stability goals. What matters most for investors is how interest rate policy affects growth, earnings, and financial conditions over time. To be clear, changes in interest rates and monetary policy can influence markets in the short term. But over time, we believe disciplined investing, strong fundamentals, and thoughtful planning remain the foundation of long-term success. At TrustBank, we've designed strategies to keep our clients well-diversified across markets and asset classes. We believe thoughtful diversification is the key to managing risk and uncovering opportunity through all market cycles. If you'd like to explore how this approach can support your goals, we'd love to connect with you.